In our next video involving the statement of cash flows, we're going to be looking at investing activities. And investing activities is when we use cash to either purchase or sell non-operating assets. So the inflows will come from the sale of operational assets used in the business. We could have property, plant, and equipment. We could also have business segments or subsidiaries. So we can sell part of our business to another business. When we do that, the cash we realize would be an investing activity. We would also have inflows from the sale of investments that we make, stocks, bonds of other corporations, a place to park our excess cash and have it available down the road and make a little money off of it. And every once in a while, a business will make a loan to another business. So what the textbook terms a non-trade receivable is when we lend money to, say, a supplier who needs extra cash to be in a position to make sure that we have a steady supply stream. Outflows in investing activities go for the purchase of long-lived assets, again, property, plant, and equipment, and the purchase of other business operations. We can buy a segment of another corporation, or we can buy out another corporation in total. When we have an outflow related to these acquisitions, they'll go in our investing activities. And we also would have an outflow when we purchase stocks and bonds or make loans to other business entities. If we make loans to a subsidiary or segment of our business, that will not impact the investing activities because that's internal. So here's a look at the investing activities from Lowe's financial statements. Again, when we're reading this, remember that a negative amount, shown in brackets here, means that we have an outflow. So the purchase of investments, an outflow in investing activity. When we sell or certain investments like bonds mature, that's going to indicate an inflow, a positive amount. So companies' portfolios will be changing constantly. We can have a year where we purchase more than we realize in proceeds, or vice versa. We can have inflows and outflows relating to the sale of property. And here we're buying property, so it's an outflow, a negative number. And we have the sale of property and long-term assets. And it's important to understand that this is not just a gain or loss. This 25 million in inflows is not the difference between the selling price and the book. It is the total amount of the proceeds. So gains and losses reported on the income statement, proceeds on the statement of cash flows. We total up all of our line items, and in the investing activity area, we expect a negative amount. We expect to be taking excess cash from operating activities, making investments in long-term assets that will help our business grow. In our next segment, we'll take a look at the financing activities.